Good morning. We're going to jump right into the text today, internal auditing, chapter 1. I'm just briefly going to go through each of these chapters and talk about it. It might help jog your memory or share some personal experience. Chapter 1, pretty high level. So we're going to look at page 1-1 here, starting here. Also, you can read the learning objectives for yourself. But internal audit, you hear that word internal auditing, usually that strikes fear into a lot of people's minds. Believe me, it does me from the past. It doesn't anymore. Negative thoughts, you tend to think of internal audit as somebody policing, trying to catch someone doing something wrong and then writing a report on it. And although that does happen, that is not the sole purpose of internal audit. Internal audit in general, as it states there in 1-1, internal audit is usually a fairly prestigious, high-profile area because the people who are working in that normally, although sometimes people are hired right into there out of school, that's usually not the case. You usually move into an area like that because you have some knowledge of the operations of your company, whether it's in manufacturing or merchandising, or maybe about accounting in general. But a real focus on internal audit is understanding systems. I don't think we talk enough about that in our curriculum, about the systems and the integration of things that go on. But internal audit is someone who is very knowledgeable at a high level and also dropping down to the operational level, from strategy all the way down to operations. There's a lot of things to consider, but internal audit is not just a policing effort. It is, as we'll see as we walk through this chapter, is something that includes many more areas than that. If you look at the top of page 1-2, in fact, the exhibit there in the middle of the page talks about those three areas that intersect there of assurance, about governance or shared governance is a term that's used a lot in higher education, risk and control. Internal audit provides this assurance on and control of processes to achieve its strategic goals. I mean, what's the strategic plan? Are you meeting those objectives? From an operational, financial, and compliance. Operational, your core business, how that core business translates into your financial operations and your financial control, your income statement and your balance sheet. And then talking about compliance. Compliance, not just an accounting standpoint, but compliance with OSHA or EPA, areas outside of what you would normally think is not accounting. Because this is a very high level of what internal audit does in trying to ensure that controls are being met and these objectives are being met for operation, financial, and compliance. The second one here, next to assurance, is insight. And there they use two terms, effectiveness and efficiency. Now, what in the world has that got to do with accounting, right? About being, of course, we want to be effective, but you ever think about accounting being efficient? Well, it's not necessarily that accounting has to be efficient or effective. It does, but they're talking more about operationally of how effective each of your operations are, each of your processes are in meeting the objectives. And being effective, you want to be efficient, right? You can be effective and be inefficient. That's not very cost effective. That doesn't really meet your strategic and financial plan of driving bottom line performance. And so that's where we want to be both effective and efficient. If you get into manufacturing and look at continuous process improvement, that's used a lot in business. It's kind of made its way into healthcare. It still hasn't made its way to higher education. Maybe eventually it will, but continuous process improvement is critical to the ongoing sustainability of the company's bottom line profit, because this country is driven, companies in this country are driven based on earnings per share. The third part of this is objectivity, integrity, accountability, independence. Very important that you have this independence of internal audit, that they're unbiased, right? Of trying to make sure that you're providing value to the governing bodies and senior management as really, as the book says here, an objective source of independent advice. So they do a good job in this chapter of really pointing that out. Again, if you look at page 3, 1-3, over on helping the organization accomplish objectives, strategic objectives, right? Operational objectives. Again, there it is, effectiveness and efficiency. What's going on in your processes in your plant? And it could be processes in HR, processes in accounting. How is your accounts payable? Your purchase to payables. Is it effective and is it efficient? I mean, you don't want to weigh it down to where you're spending more money than you're getting value out of it. You know, companies spend a lot of money trying to analyze cost adders and value added. You want to get rid of the cost adders and just focus on the value added, but you do have to have certain amounts of cost added operations to make sure that you have these controls in place. But always think about adding value. Very important. The third one there of the objectives, strategic, operational, reporting objectives, the reliability of internal and external reporting. And that's what we always think of as accountants. External reporting, the accuracy there, the reliability of our financial statements, and then compliance objectives, the adherence to applicable laws, regulations, contracts, right? Are we adhering to the contracts? Going on to page 1-4. Top of the page, exhibit 1-2, illustrative business and audit engagement objectives. Look at these business objectives that companies have from a strategic, operational, reporting, compliance. And to the right side there, the audit engagement objectives. We'll look at the business objectives for strategy. Grow the organization's market share by acquiring complementary business. Well, how does that apply to internal audit and the audit engagement? Again, we're talking about internal audit, not external. Ensure that the information management uses to decide whether to acquire company X is accurate, complete, and valid. Well, I can tell you that if a company is going to buy another company out, there's a long process of due diligence of making sure all these assets and liabilities that go on your books are at fair market value, right? You remember that from back in 30/20, intermediate accounting, of doing the due diligence of putting on your books, not the equity, but the assets and liabilities at fair value from the company that you purchased. And what's the difference between that? If you pay more than the liabilities, as you pay more for the assets minus liabilities, then you have goodwill, don't you? You record that goodwill as a debit, and then you, depending on your company, you amortize that. If you're a private company, and if you're not a private company, you just leave it on there and then test it every year. But this due diligence and goodwill that is being performed here, the audit engagement, how do you determine what fair value is, right? A lot of detail there. What about the operational objective there? Ship all orders no later than 48 hours after receiving the orders. And the audit engagement objective there says determine whether orders are in fact being shipped within 48 hours, right? Operational. It's not just financial. This is time driven. Of course, that's when revenue is recognized. Of course, that's a whole nother issue here when we start talking about recording the revenue, because that's really the next step here, or next level. I don't know if it's level, but next section here, reporting. Record only valid sales transactions. And what's the audit engagement objective? Verify the design adequacy and operating effectiveness of control activities put in place to ensure that recorded sales actually occurred. In other words, recorded sales reflect the transfer of ownership on goods shipped to customers. When does that occur? Is it when they get shipped off your docks and it comes out of your inventory? Or I guess I should back up. Is it when it gets picked out of your inventory and it's sitting there waiting to be shipped? Is it when it's actually shipped, or is when it is delivered? Now, I can tell you that depending on your customer in shipping something, sometimes title passes when your customer picks up the order from the docks, it goes across that threshold. That's billable revenue. But if it's going on to a third-party carrier truck and it's en route and ownership doesn't transfer until whoever you sold it to takes ownership of it or takes possession of it and ownership, then the title passes. So in fact, you actually own that material or that product as a company until on the roadways until your customer actually takes ownership of it. And those are things that have to be looked at from an audit engagement, from internal audit and your external auditors, especially because, you know, fraud or revenue recognition is one of the greatest fraud risk, probably the greatest fraud risk that you have in a company. And then they get into compliance. And here they use a good example here of compliance with OSHA. Or in Tennessee, we also have TOSHA, Tennessee Occupational Safety Health Organization or Administration. What about the EPA? And here the audit engagement says determine that policies and procedures, right? Policies to drive your procedures established to ensure compliance with OSHA regulations are well understood, documented, and communicated. And there's other things there, contracts that you have, are contracts being followed with various customers, with various suppliers. A lot of stuff here that is a part of the overall strategy of internal audit and audit engagement objectives. So you can see where a systems understanding of what's going on is so critical to internal audit and external audit as well. Although this class is about internal audit, which is a part of your company. They're your employees. It's like ETSU employees, a staff of internal audit. I don't know how many they've got over there, but they're trying to make sure that all policies and procedures are being followed, and they're making sure all these objectives, which they're a lot different for manufacturing than they are higher education, are being followed. Basically, you're doing what you say that you're doing. So the bottom of page 4, evaluating and improving the effectiveness of risk management, control, and government processes. Governance is the process conducted by the board of directors to authorize, direct, and oversee toward the achievement of the organization's objectives. That's sort of a broad statement, but that's what it is. Now they use that term adding value, middle of page 5. That's how you become efficient and effective. Focus on value-added activities, not cost-added. All right. You say, well, what are some of the cost-added activities? I'll tell you one that's a cost-adder is in a manufacturing environment is inspection. Inspection is really old school. You inspect quality into a product. Well, that's never going to work. You may have to do some inspection. We had to just to make sure we didn't get hit with huge demurrage charges from what we would ship to a customer like a Toyota or a Nissan or BMW. If we didn't meet their quality standards when they picked up their product, they could hit us with $100,000 demurrage. Well, it pays to actually do some inspection, but that's a cost added operation. It adds no value. The only value it adds is that you're avoiding getting charged $100,000 for potential problems of them picking up batteries, taking them to their plant, and in a JIT system, potentially shutting down their process. But it has no value of inspection. Inspection is just catching what you should have built quality in from the beginning. So that's a good example of adding value versus cost. And that really applies here to internal audit as well, and what they're looking for and how efficient and effective a company is. Of course, independence and objectivity, how important that is. You've had that in undergrad classes. Page 6, what's the engagement process, internal audit engagement process? You know, page 6 is planning the engagement, obtaining an understanding of the auditee or customer, setting the engagement objectives, determining the required evidence, the nature, timing, all of that. Then you perform the engagement, right? Then you evaluate what you've collected or gathered, and then communicating the outcomes of your audit. What about the relationship between auditing and accounting? Is there a relationship? Well, not really. Some of the stuff off my screen. They do a great job at the bottom of page 7. I'm not going to read that to you, but all of it anyway. But the last part says auditing emphasizes proof to support for financial statements and data, right? Thus, auditing has its principal roots, not in accounting, which it reviews, but in logic, on which it leans heavily for ideas and methods. So accounting is all about collection, classification, summarization, communication of financial data. Audit is just making sure you're following, whether it's internal or external audit, you're following, because it's really, it's analytical, not constructive. But I would read that at the bottom of page 7 for an understanding between what's the difference between auditing and accounting. Right, page 8, you know, Sarbanes-Oxley Act of 2002, we've all been through that. I lived back in a manufacturing environment in the early 2000s and beyond, attesting to the effectiveness of companies' internal control over financial reporting. That's all the way from the top all the way down to the plant level and departmental level as to what you're doing. And they even point out here at the bottom, it says, for example, Sarbanes-Oxley requires the CEO and chief financial officer of all U.S. public companies to certify the company's financial statements as part of their quarterly and annual filings. But that went all the way down to the plant level, where the plant manager and the plant controller had to sign off on all of the controls that we tested on a monthly basis. Now, they required that quarterly as a quarterly internal control checklist. And there were all kinds of things in there that you would have thought sounded unrelated to financials, but it was related to financials because it was numbers driven. I mean, I could give you a list of probably 100 different things that we had to go through after Sarbanes-Oxley was implemented that we never did before. We may have done it before, but we didn't have to attest to it by myself and the plant manager signing that. One of those was, I'll just give you one example. One was we would receive maybe probably 40 loads, well, not 40, probably 20 loads of lead a day, because that's what goes into a battery, lead and sulfuric acid primarily. We received 20 loads of lead a day, which were about 40,000 pounds of lead on each of those truckloads, about 800,000 pounds a day. Probably maybe 5 different alloys. So each of the alloys had a different part number. And once we received that on our books, that material was ours. It was in our inventory. And if we received 38,000 pounds physically, and we actually put 40,000 pounds on our books through receipt into our ERP system, like SAP, we would lose 2,000 pounds first time we do an inventory because we never got to 2,000 pounds, right? And what this Sarbanes-Oxley required was we had to weigh, well, not me, but the people on the docks who were receiving that material onto our books through our purchase order system, that they would key in the receipt of the pounds and through the purchase order and the alloy, the part number, that would go on our books. They were required once every day to weigh one of the alloys that we received. It may be 5 different alloys. They had 5 of these that they had to actually weigh every pallet and the lead on those pallets to make sure what was received, ladings, not just purchase order, but the bill of ladings, because the bill of lading is what the company said they were shipping to you. A lot of this was intercompany within our own plant or within our own company. Very little came from outside, but we're still required to do that, that we were verifying that we were in control of our receiving process. I could tell you about a lot of other different areas, but that was one that it was really all about pounds received of lead, although that translates into dollars when you looked at the standard cost was like 35 cents per pound. But if you had 2,000 pounds, that's $700 you would lose. All right. Well, do that every day for a year. It's a big loss. So they wanted to, part of this internal audit, external audit, because they were both the external audit and internal audit were always asking us to show proof that we actually were doing this. And then I had to have proof in order to sign every quarter that we were doing this every day. That's just one of many things, but that's what they're talking about there in the bottom of page 8. We'll get into that more later. Bottom of page 9, nature and scope of modern internal audit services. Again, a lot of this they're kind of restating, but operational effectiveness and efficiency, right? The first one. Again, internal audit is there to help you be more profitable. It's not just about policing and saying, smacking your hand or writing you up and saying, we caught you doing this wrong. It is about helping your company be more efficient, more effective, which means a higher bottom line. Reliability of information system, quality of the decision-making information provided by those systems. Can you make quality decisions from the information? That's always a concern. You know, when we work all these problems in 30/20 and even in principles, you get all this data there in your homework, and the assumption is your data is right? The biggest challenge in business is, do I have accurate information? That's the biggest problem. If you got accurate information, the journal entry or what you're going to do with it, the decision making is easy. So reliability of the information systems that you have, whether they're manual or automated, is irrelevant. Because automation should help, but sometimes automation is a hindrance. You've got automated garbage. What about number 3? Safeguarding of assets against loss, including losses resulting from management and employee fraud. You don't have assets walking out of your building. You don't have assets being dismantled in your process and being cannibalized and used for repair parts, because those assets are on your books, driving revenue, being depreciated. Safeguarding of assets, compliance with organization policies, contracts, laws, and regulations. Are you doing what you say you're doing? We went through a lot of audits, not just internal, external audits from PwC and Arthur Anderson, Ernst & Young, and then an internal audit. Wasn't just that, we had audits through ISO 9000, which we had one specific for the big 3 automakers at Exide and Lear, which was called TS 16949. TS, which I think is Technical System 16949. You can Google that and read about it. But it's really about quality assurance, not just control, quality assurance for what it is you're manufacturing. And they always say, we just want to test that these procedures, these policies, these procedures that you have, are you following your procedures? And they'll read that, they'll go out on the shop floor and audit the systems, they'll talk to employees about it. And it's always something that brings a lot of fear, because we go through those audits twice a year for non-financial. Of course, that has an impact on financials, but they don't care anything about the financial side. They're looking strictly at what you're doing as far as your production processes. But that does drive your financial performance, make no mistake about it. Then on page 10 and 11 is sort of a timeline of the Institute of Internal Auditing, which started, it looks like, in 1941. Various things that have happened. Page 12, page 13. Look at page 13, professional certifications. You ever heard of a CIA? That used to be the big 3. In my opinion, it still is. I know when you walk into the front of Sam Wilson Hall, we've got brochures out there about the CPA, the CMA, and the CIA. I know when I was here years ago, we had a professor that was a CPA, CMA, and CIA. And that was really the 3 professional certifications that are out there and are still there, although there's a lot of new ones now, a lot of different. There's a CGMA, which is nothing more than what the AICPA has sort of developed their own management accountant certification. But I think CGMA stands for Certified Global Management Accountant. But the CMA is completely separate from the AICPA and is held in much higher regard. But CPA, CMA, CIA. CIA here, CPA is a 16-hour exam now. CMA is 8-hour. And CIA, I believe, is a 6-hour exam. But it's held in high regard for internal audit. Just gives you that extra oomph, I guess you could say, on your resume. And I would encourage you to do that. I don't know anybody's got a CIA, but it's out there. Like I said, AICPA probably has their own set of internal audit control stuff now. Again, look into that. And like I said, the CMA is 8 hours. It used to be, when I took it, it was 16 hours. It's 4 4-hour parts, but now it's just 2 4-hour parts. CPA is used to be 20 hours. I think it's 16 now, 4 4-hour parts. But they go on to talk about skills and so forth, credentials. Getting over on page 18. Levels of knowledge and skills. Education and auditing. If you're working in internal audit, auditing, accounting, information systems and technology. So important. business risks and controls, hands-on experience with audit-related software such as flowcharting, spreadsheet, database, generalized audit software, people skills, right? Interpersonal and communication skills, top of page 18. Ability to think analytically, all important. So that brings us to the summary on page 120 and then some review questions. The first deliverable there in the syllabus is all multiple choice questions on page 122. Only 5 of them. You need to answer those. And also case 1, which is on page 24. And it says here on case 1, visit the IIA's website, locate, print, read, and prepare to discuss the following items. I mean, a lot of this you can get out of this chapter, but if you want to go to there and look that up as well, you can. But there's a part A, frequently asked questions about internal auditing. Part B, the content outlines for the 3 parts of the CIA exam. You need to type those up. I mean, you can handwrite them. You better make sure I can read it, because I'm not going to struggle to try to read somebody's handwriting if it's bad. Your grade will suffer. I would type those up. You can type as fast as you can write. Most people can anyway. But put that in Word and then submit that to the Dropbox by the due date. Again, get those in on time. But that is chapter 1. So that's sort of a brief overview of what's going on there. And look forward to seeing you next time. We'll look at chapter 2. We'll talk at you soon.